Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 21st of June in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, financial industry voices warn that Emmanuel Macron's election gamble in France is risking Paris's hard-fought status as a rising European hub.
Keir Starmer's Labour Party prepares to deliver a planning reform blitz if they win next month's election.
Plus, with the end of the cheap money era, the world's biggest real estate investor, Blackstone, is moving into riskier new terrain. We have a special report.
Let's start with a roundup of our top stories. In France, the latest polls show the far-right National Rally holding its lead, with President Emmanuel Macron's group still trailing in third place. But the far-right and left-wing politicians faced a hostile reception from business leaders yesterday as they laid out competing visions for the country. Speaking to Bloomberg outside the event, National Rally President Jordan Bardella refused to accept that his party's policies have spooked the markets, instead seeking to blame the media and left-wing parties.
I think you're the one causing the concerns on the markets in a pointless manner. We have decided to widen our majority because I think there is a real danger today to see Jean-Luc Mélenchon and the far left coming to power, which would make France like Venezuela without the oil.
Despite National Rally President Jordan Bardella's view, investors have already voted with their feet. More than $250 billion was wiped off the market capitalisation of French firms last week, pushing the country below the UK as Europe's largest stock market.
Germany is exploring whether to copy the UK and Italy and outsource asylum procedures to a third country. Chancellor Olaf Scholz and the leaders of 16 German states discussed a plan to reduce the number of migrant arrivals after the right-wing Alternative for Germany party surged in European elections this month. Scholz has pledged to speed up the asylum process and send back applicants who are turned down to their home countries.
The Bank of England gave traders fresh hope of a rate cut soon. Policymakers voted 7-2 to hold interest rates steady on Thursday, but said their decision was, quote, finely balanced. Bloomberg's UK correspondent Lizzie Burden says that higher than expected inflation did not change minds.
The bottom line is August looks live, bar any inflation surprises. But it's interesting in the guidance, they actually talked about that services inflation number. Yes, some people thought that it was a risk that there would be second round effects, but others dismissed it because actually this is a backward looking reading and we've been past the peak of services inflation.
Lizzie Burden added that investors have now priced in more than a 50% chance of a move at the next meeting in August. It comes as UK consumer confidence rose to the strongest level in 2.5 years, according to GfK, reflecting an improved economic outlook ahead of the general election.
Turning next to the news from retail sales here in the UK. Some breaking news this hour. The latest retail sales data growing stronger than expected in May. The number excluding fuel showing expansion of 2.9% last month. That follows a contraction of 1.4% in April.
Meanwhile, Bloomberg has learned that the Labour Party is preparing a planning reform blitz if it wins the election. Keir Starmer's party would reportedly use ministerial orders to speed up the implementation of its housing policy, including its pledge to deliver 1.5 million new homes over 5 years. Bloomberg's James Wilcock has more.
With multiple polls predicting a record victory for Labour in 2 weeks' time, attention is turning to what they would do in power. Sources tell Bloomberg a Keir Starmer government would unleash a flurry of officialdom, reinstating mandatory building targets, starting leasehold reform, and instructing local planners to go ahead with building projects all across the UK. It remains to be seen if they can make their ambitious housing target a reality, though. A Bloomberg investigation found that the average annual funding in local government planning departments has tumbled by nearly half since 2010. In London, James Wilcock, Bloomberg Radio.
A pair of large bets in the Fed funds futures market are attracting attention on Wall Street. The multi-million-dollar wagers stand to benefit from a ramp-up in expectations that US policymakers will reduce rates as soon as July. While it's an unlikely outcome, the bets underscore momentum in the market behind a cut. And that's despite the latest commentary from those setting rates. Minneapolis Fed President Neil Kashkari says the central bank will return inflation to the Fed's 2% target, but warns it will take some time.
It'll probably take a year or two to get all the way back down to our 2% target. The good news in all of this is that the labor market has remained remarkably strong. Wage growth is still pretty good for workers. By some measures, might be still a little bit too high to get back to our 2% inflation target. So getting all the way back to 2% is going to take a little more time, but I'm confident that we're going to get there.
Neil Kashkari's comments were echoed on the same day by Richmond Fed President Thomas Barkin. He says he needs more clarity on inflation before cutting interest rates. In a moment, we'll bring you more on how the financial industry in Paris is viewing the upcoming elections. But another interesting read that caught our eye this morning from our drinks newsletter, Top Shelf Society. Always worth a read on a Friday morning if you're thinking about the weekend. This is about ghost distilleries rising from the graves. There's two parts of this story. One is that casks of whiskey, which are from distilleries that are no longer operating, are attracting huge premiums, rarity value, unsurprising perhaps there.
Okay.
One example, Little Mill 45, which is a bottle from Scotland's first licensed distillery, which closed down in 1994, hit shelves for £12,500.
Okay.
Not bad. But then there's the question too of the reopening of some of these old distilleries in Scotland as well. Diageo investing $46 million in resurrecting two shuttered sites, Brora and in Port Ellen as well. This is something that could see a return. They're trying to recreate the conditions that were there before some of these distilleries were mothballed. So trying to recreate, of course, a lot of them won't be producing any whiskey for a while because, you know, it takes a while to get it done.
Well,
Watch
I mean,
out for
listen,
the gin first, maybe.
There's been the London gin craze, right, of the last few years.
Not to be confused with the London gym craze. Something completely different.
That's very different. No, they're two very different weekends. So, yeah, I think it's a lovely story. And also, I mean, it's a huge Scottish export, isn't it? And the rarity factor.
And big investment as well.
Yeah, absolutely. So it's a really nice piece. Brad Jaffe has it for you on the Bloomberg terminal this morning.
Let's get you more details now on our top story and how the French elections could threaten Paris's place as rising hub for European finance. Our Paris banking reporter Alex Rajbandari joins us now for more. Alex, good morning. How are the big financial firms, many of whom have been building their presence in Paris since Brexit, thinking about these elections?
Yeah, as you say, most Wall Street lenders have been moving traders and moving billions of assets in Paris over the past years. Just last month, Macron was entertaining all of those leaders in Versailles. The decision has blindsided them, but when you speak to people familiar with them, there's no plan to backpedal on those expansion plans for now because they've invested with a long-term view and the uncertainty is not going to affect those decisions for now. However, when you speak to lobbyists elsewhere, be it in Germany or in Italy or even in the UK, people are starting to wonder whether their own country is going to be a bit more competitive for firms willing to set a foot on the continent.
So which policies are these financial firms they're actually most worried about? I mean, obviously, with the Snap poll, everybody's still trying to figure out what the policies might be.
Yes, well, it's really unclear what the outcome of this election is going to be. A topic that comes a lot in conversations is taxation, because on both sides of the political spectrum, being the far right or the left-wing alliance, they are likely to revive a wealth tax. That will be quite a change for the financial industry here. But another thing is immigration, because the far right's tough stance on immigration historically is sparking some worries that banks will not be able to issue work visas for traders and bankers they want to relocate to Paris. So that comes to mind quite often.
What about the concerns over policy paralysis? Because, as you say, the outcome of the election is still very unclear at this stage. Of course, still weeks of campaigning to go. But also, the eventual makeup of the parliament could actually mean that not very much gets done at all. Is that something that financial firms are worried about too?
Right. Well, the biggest issue for investors, for instance, is uncertainty. I was speaking to the chairman of the PE lobby here that said that he didn't like it, of course, and that the current uncertainty is going to be short-lived, because even if there's a policy paralysis, eventually this is something that people can live with, it appears. The problem is the uncertainty shouldn't last too long, because then it can be kind of putting for investors and funds that put billions at work in the country.
In terms of the market reaction, it has been very severe. Is there any expectation that some of the money that has flowed out might return? What is your reading of the kind of temperature of investors and their thinking about Paris right now?
Well, it's been quite a sell-off in the past week. If you look at figures, the CAC 40 has erased most of its gains last week. It picked up a bit more recently, but it's really unclear what's going to happen, what investors are going to think. When you look at a Bank of America survey, the Paris stock market was their favorite last month, but it's become their least favorite now. So it really is, the jury is still out.
Okay, Alex, thank you very much for joining us. Alex Rajbandari there, our Paris banking reporter, bringing us details of his latest reporting around how the financial industry is feeling. Of course, we had that big event yesterday hosted by the MEDEF Business Lobby Group, and we've been hearing from Caroline Connan, our colleague's interviews with some of the politicians she spoke to there, including the National Rally President, Jordan Bardella, talking about how he blamed the media for the market turmoil that there had been, and saying that, you know, it's not their fault that the markets are worried about this.
Well, that's very Liz Truss, isn't it? I mean, if you think about what happened if you're making that comparison potentially about France and the UK, there's that issue.
Interesting too. We also spoke to the Euronext CEO Stéphane Boujna on Bloomberg Television yesterday on this issue too, and he was talking about how it's understandable that people are puzzled and trying to analyse what's going on in France because France doesn't usually have snap elections. But he said he doesn't see this as dismantling any of what has made France attractive to businesses until now, or the position that it's had over the past 10 years of being able to attract more businesses too. So some caution, I think, also from business leaders there, although the rhetoric from the politicians is still pretty concerning as well. The left wing, interesting, the Eric Coquerel from the France Unbowed party on the left that Caroline spoke to in Paris yesterday as well, saying that it was Emmanuel Macron's fault that there was this chaos in the markets because he's the one who called the election.
Okay, all right, that's clear. So that when it comes to what's happening in France. Now to property. As the era of cheap money is far behind us now, a big investor is moving in on the hunt for some stellar returns. Blackstone's co-head of its massive property arm, Nadim Meghji and Kathleen McCarthy, have $65 billion of dry powder to deploy on deals. And our Bloomberg real estate reporter Jack Sidders has been digging into this story. Jack, very good to have you on the programme. Good morning. Firstly, I suppose, what is Blackstone actually looking for in terms of the sorts of real estate deals that they want?
Morning. Thanks for having me on. It's decided to do this story now because it's an interesting time to look at private equity real estate investing. We're in this, completely new landscape. Interest rates significantly higher, therefore property yields much higher. And so it's really changing the way that investors are having to approach things. And Blackstone is the biggest real estate investor that there is. So it's a look at really how their approach might evolve in this new world. I guess traditionally Blackstone made its name in real estate for buying things, fixing them, and selling them. And historically, the two big areas of commercial real estate have been offices and retail. We know what online shopping did to retail, and now we've seen what working from home and various other challenges are doing to office. So where are they going to put to work this just massive amount of capital that they have to deploy? And over the last few years, they've become very, very sort of sectoral focused. And that seems to be continuing as they start to deploy this capital in this new landscape. So they're going down a few different niches, still very much into logistics, so betting on that sort of e-commerce and reordering of supply chains theme. But the really big one that they're going for this cycle seems to be data centers, huge amounts of capital going into this, which is quite a different thing for an investor like Blackstone, but really betting on that massive AI boom, which is going to cause huge demand for these sort of server farms of the future.
Yeah.
What are the risks for Blackstone in making this change?
It's an interesting time because you could go back as far as 1981 and you had basically 40 plus years of the cost of government borrowing getting squeezed ever lower. And what that meant was that property returns were also getting squeezed lower. So that was this huge tailwind for anyone who was investing in property. But that's come to an end. For how long, we don't know. But I think the consensus at the moment obviously is things are going to be higher for longer. So the way you make money in this environment is not necessarily with your capital markets acumen and being very clever on that side of things, which obviously, the big private equity firms and Blackstone, the biggest of the lot, have had huge success with. The way you make money in real estate now is by driving the other side of the equation, which is the rent, the income. And for that, that's like the hands-on nitty-gritty of real estate investing. Finding the right building in the right place, making it better, adding value, which, Blackstone is obviously an enormous organization now, lots of data scientists, all sorts of people to help them do this. But when you're talking about deploying, $30 billion funds, and real estate is an inherently granular asset class, it's a really intriguing challenge.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.